The stock markets were left bleeding on June 4th as India witnessed the biggest event of this year. Exit polls on Monday had shifted the entire D Street sentiment in favor of NDA's victory, but on results day, India saw something that no one was expecting. Going neck to neck in states like UP and Maharashtra, the Congress-led India Bloc put up a strong fight against the BJP-led NDA alliance. As a result of this tug-of-war, Sensex and Nifty were in the red during the whole session. I'm Neha Mahajan and here's what happened in the markets on June 4th. Let's take a look. After falling over 6,000 points during the day, BSE's Sensex closed 5.4% down at 72,079, while the broader NSE Nifty dropped 5.93% and closed at 21,884. About 30 lakh crore rupees were wiped out from the markets during the June 4th trade. The market capitalization of all listed companies on the BSE declined to 396 lakh crore rupees. During the day, the indices fell as much as 8.5%, poised for their worst session since the onset of the COVID-19 pandemic. They had jumped over 3% on Monday after exit polls projected that the BJP-led alliance would likely get a two-thirds majority in the lower house. Following the trends, Adani Group stocks closed 10 to 21% lower, while from the Sensex pack, NTPC, SBI, L&T and Power Grid closed 12 to 15% lower. Coming to sector-wise performance, barring the Nifty FMCG index, all the sectoral indices closed in the deep red. Nifty Bank fell 8%, Realty fell 9.6%, PSU Bank fell 15%, Oil and gas fell 11.8% and metal index fell 10.6%. Meanwhile, small cap and mid cap closed 8.2 and 7.9% lower respectively. The election results proved to be negative for the stock market investors as the BJP fell short of getting a simple majority on its own and rest depends on NDA partners. Nifty is now trading at a PE of 19.5x. Coming to the brokerage view, brokerages have warned that a D-rating is in the offing for Dalal Street and that high-flying Modi stocks could face a reality check. UBS said this was not an election outcome the market valuations were set up for. India valuations have been expensive for ordinary corporate earnings growth outlook. One of the arguments behind India's rich valuations could have been the political stability, policy certainty that a strong government gave. Some of those assumptions could come under question. Emkay Global said India will likely derate due to higher risk perception and that investors must switch from PSUs and capital goods to FMCGs. Sheshadri Sen of Emkay Global said, at current levels, we are neutral and would stay invested but not add to positions. If Nifty does correct another 10% to below 20,000 level, we see the market being attractively valued at 18x PE and see an entry opportunity back into Indian equities. Analysts are expecting Modi to be back in power, but it will be dependent on regional allies like Telugu Desam and Janata Dal Secular. Policy adjustments will be done accordingly. Well, that is all for today. Stay tuned to ET Markets for more.